about the future of payment settlement in a decentralized economy. Please welcome Marjan Delattine, Head of Global Banking at Ripple.
Hello, everybody. Can you hear me well? Still ready to listen to me? Great. Well, I'm going to take you through the future of payment in a decentralized economy. Before talking about the future, let's see how we are today. We cannot build the future without knowing how we operate today. And I think when we get to the decentralized systems, that's where we need to be very conscious. Everything today in our normal life is centralized, is operated and created by a central trusted party. This starts from payment, banks, gaming, social media, stock exchanges, so anything that you name it has been based on this business model. And that's the complexity. So jumping from a centralized world to the decentralized is not only about changing a technology, is changing the mindset. The decentralized systems have been around for some time. Probably internet is one of the success stories. We know that has created lots of business models and is connecting us much more, and probably we are living in a better world thanks to internet. But at the same time, internet is networking different centralized systems. And probably the advent of blockchain is around really bringing the decentralization into the world. And what we mean by decentralization means giving the control to the individuals and organizations. Now I will take you through my story, which is the story of the Ripple. I don't know how far you're familiar with Ripple. We have been around for more than 7 years. And our use case is cross-border payments. You like it or not, we are living in a global world. People probably don't like necessarily globalization, but we are living in this global world. But there is something missing, and some people are very upset about the globalization. It's not because it's bad, but because it's incomplete. And let me say why. When we look at the fire, in order to have fire, you need 3 elements. You need the interoperability between fuel, oxygen, and heat. If one of them is missing, you will just have smoke. If we look at the globalization and how the world is today designed, you have 3 major elements. You have goods, you have data, and you have money. It's the interoperability between these 3 that create the real experience of the globalization. And today, when we look at the data and goods, there has been a subsequent work since early centuries to get to the level of interoperability between networks. But when we talk about payments, we are far from what is the interoperability between systems. So let me just take you through some history. Pre-container, what was the world? How it will look like? So it was so cumbersome, so lack of standards were creating so many costs. And the trade today was not the way it is today. Since the introduction of the container, which is a standard on its own, we changed completely and dramatically the trade worldwide. After 2-3 years, it was more than 700% increase in the trade level. It is very simple. Probably we don't even think about it. Now, let's think about the internet. When it started, internet, actually, it was a composition of different, actually, networks. So you should have been in the same network of your friend in order to be able to send emails. Are you thinking any more about when you are just dropping an email, are you in the same network or not? We don't think about it. We are just connected. We are connecting the data. And today, you can even just go to an iPhone and have an experience of just buying a ticket. But when we look at the payments, believe it or not, we are not yet there. Today, the payments, especially when we talk about the cross-border, is completely a mess. because there is no central counterparty or central bank that it is looking in the cross-border. So the way that the system is designed, actually, is going back to the Medicis period, is a bunch of liability between the parties involved in the cross-border transaction. And this hasn't changed, I can tell you, it hasn't changed. So it brings lots of inefficiencies. And more importantly, in order to transact cross-border, financial institutions today need to pre-fund their accounts. And pre-funding has a big cost. I will come back to that later. Today, as an individual, try to send 50 euros from here to Norway. Half of it, no, I'm probably not exaggerating, but big chunk of it is disappearing. And when you send it, there is a hole. So you pray God that when it is getting there, and probably if you're very lucky, your bank will say, oh, maybe it is there, but you are not even sure that the amount was the amount that you sent. This is for a world that is like us. We still have 50 euros to send. Big chunk of the human population today are living on their property. The remittances, the people that are really on the low threshold, they are sending 50 cents home. And this is not about luxury. This is not about buying things. This is helping the households. So really helping the growth of the economy. So, and we are talking a lot about technology, of course. Everybody's talking about Internet of Things. But at the end, Internet of Things is very simple. There will be billions, more than people, human beings, machines that need to talk together. And not only talk together, they have to send micropayments. Do we have an infrastructure that it is able to cater this world? I don't think so. Now, you're talking about the global payments today, as I mentioned, 3 to 5 days, simple transaction. Even if you go to some that are very expensive, they probably will let you that this is real time, but they are facing a lots of challenges that it is linked to this market infrastructure. It's costly and it is unreliable. And I will tell you why it's unreliable. Because today, the rail of the payments is like sending an email. The data today is not transferred by the value. So you send an email to the end of the chain, and you wait that this is settled. But the data is not happening at the same time. This has a big impact. You're talking about lots of compliance. When you talk about the distributed ledger technology and blockchain, one of the, I think, probably the missing part that we do not talk about it a lot is around how the data could be managed in a much more efficient way. And what is the customer experience today? I know this is a very, how do you say, cliche about experience, but it's true. As an individual, we are living in real time. Real time is becoming a reality. On-demand real time is happening in Europe, in other countries, but we don't have a cross-border real time. And you as an individual, you will not think about, okay, I need to send a payment. You want to have it on demand. I think everybody is going towards payments is becoming a commodity. We see the paradigm of open banking. Everything that it is happening in our regulation is actually pushing financial institutions to rethink themselves and diminish the cost. But diminishing the cost in the current structure is not easy because they are living in a bunch of legacy systems, and I can tell you it's very complex. Now, coming back to the subjects of this conference, which is around blockchain, and we can't talk about blockchain without talking about crypto. Crypto assets. So I've discussed around the cost of the cross-border transaction today. Most of this cost is related to the pre-funding. So in other words, your banks or any financial institution send 24, 48 hours in advance the funds into the destination country. This has a cost. And they are obliged to maintain multiple accounts in different currencies. So that means that they are exposed to the FX rates, and they are exposed to the counterparty risk. Well, is there any other way? Is there any other means that we can use to change this experience? That's what we believe. And we think that digital assets and the use case of the digital asset in the cross-border payments is rather than pre-funding, in a world that it is, I don't know, everything is real time, sourcing on demand liquidity. So when you want to send the money, you just go and you take the liquidity at a cheaper price. The way that we are actually implementing this use case is very simple. We do have XRP, which is our native currency. So what we do is that rather than sending money in advance, you have $100, let's imagine, you want to send to Mexico, okay? Today, as I told you, 48 hours, the money needs to be there. You don't do that anymore as a payment service providers. You go to the crypto exchange, you convert the $100 to the XRP, and immediately after that, you reconvert back to the Mexican peso. This is very transformational in a sense that you are using the crypto as a bridge asset. It's the way that USD is working today in a large trade corridors. We are not saying that we want to replace USD and euro, and I don't think that this will disappear. But I think in certain corridors where the pre-funding has become very costly, changing and sourcing on demand liquidity is much more efficient. We did actually, there has been a study around how the market is ready to take up and to go for such a business models. Say 75% of the financial institutions today are open to take crypto assets as a bridge currency. This is transformational. I know that in Malta you have a favorable regulation, an open regulation around cryptos. This is not still the same worldwide. There are some markets that are more advanced. But I think the pressure coming from the industry will help this industry become more relevant in a time. To give you an example, because, you know, just theory doesn't make sense. We had a partnership this June actually, with MoneyGram. MoneyGram is one of the largest remittances in the world. Well, they are facing some challenges and competitions. So the aim for them is to diminish the cost of the remittances. They opted actually to use the use case that I was explaining about using crypto asset as a bridge currency. And obviously, the ultimate goal is to bring the economy of scale and the cheaper and better service to their users. Our vision, and I heard that in multiple ways, and I know some people are using that, is the Internet of Value. Internet of Value means sending money like you send messages today. Well, but easy to say, of course, especially when we talk about money. We are talking about jurisdictions, we are talking about legal, and we are talking about trust. We are working a network, we call it RippleNet. I can tell you I'm coming from Swift. I used to work many years with incumbents and existing infrastructures. And when I joined Ripple, I knew how hard it is, especially in a world that, you know, you are talking to banks and financial institutions mainly. But what we are doing in a nutshell, you cannot transform the world overnight. This is not going to happen. You have to go with the pace of, or the readiness of the financial industry. So what we are doing, part of our work is to help the business as usual, the banks, to use the power of DLT through the point-to-point connections in order to test this technology and get trusted. So they are using actually our softwares in order to send money from one point to another. It's real time, it's cross-border real time, and it is addressing a lot of challenges. Secondly, we are working very closely with those organizations that are ready today to embrace digital assets for the sourcing on demand liquidity. And of course, we are helping the community to embrace this technology together. This is a bunch of names that you see, more than 200 customers. This is not marketing. Most of these logos that you see today, they have signed production deals. This is not about proof of concept. This is not about having that in the lab, just on the dark side of the organization and ticking in the box to the CEO. We experience blockchain. No, we have been over that. I think that's a good news for this industry, because as we get more mainstream, as better is for all of us. Thank you for your time.